Welcome guys to a new video. In this one I'm gonna share with you guys a game changer concept. I'm gonna share with you, and I've been very excited to do this video for a while now. I've been planning for it, and I believe this skill will change the way you trade, guys, in these markets. Completely change your way of looking to the markets. In this one we're gonna talk about a real market structure shift versus fake market structure shift. What is the difference between them, and how to anticipate a fake one and a real one. So the structure of this video, it's gonna be like this. First of all, we're gonna define each one of these concepts. Then we're gonna know what makes a market structure shift fake and what makes it real. So we're gonna talk about characteristic of each one of them. And the last one, and the most important one, is I'm going to show you live chart examples, guys. So how does it look like in the chart? So by the end of this video, guys, you will be able to differentiate between the two and trade with logic rather than patterns. So at the end of this video, you will not just know the difference between a fake market structure shift and a real one, but you will gain a knowledge of trading with logic rather than patterns. You will know exactly why each move happens. Alright, guys? So stick to the end of this video. Proceed with open mind, guys, and I believe you will leave with something valuable. Guys, before we start, I would really appreciate if you subscribe to my channel if you enjoy the content that I'm providing. That would really motivate me to do more videos like this, and I will know that my content is actually helpful to people. So with any further ado, let's just get started. So first of all, we have a real market structure shift right here and a fake market structure shift. So the common thing between them is they share a displacement, an energetic displacement. So something like this and like this. So this is a displacement. Let me just fix this here. So this is a displacement. So they both share a displacement. Now the thing is, a real market structure shift will hold price from here. So it will retrace this displacement. The price will retrace a fair value gap right here and continue higher. While fake market structure shift, it will broke this fair value gap right here, violate it, and continue lower. So that's the common thing between them. Now let's start. By the end of this video, you will be able to anticipate where that displacement will fail to hold price and when it will hold price to go lower. To go higher or lower based on the context. So let's start with a real market structure shift. It is a shift in market structure from bullish buy program to bearish sell program, or vice versa, meaning from a bearish to bullish, defined by an energetic displacement and breaking opposing recent swings. So it's something like this. It would be like this. So the price is moving higher. So we are taking this example from bullish to bearish. The price is moving higher in a buy program, all right, then reaching a higher time frame objective, then a displacement, an energetic displacement, breaking an opposing recent swing right here, and then retracing to fair value gap and order block, I don't care, and then continue lower. Now this is a real market structure shift, guys. Now let's talk about a fake market structure shift. By knowing this, the characteristic and the definition of a fake market structure shift, you will know exactly how to differentiate between them. So we all know this one, alright, guys? The real one, we all know it, but the fake one is what is mysterious. So aka inducement, also known as inducement, refers to enticing or exciting traders to enter the market, often leading to impulsive decisions. Market makers may use inducement to create big movements that draw in inexperienced traders who then provide liquidity, and focus on this one, who then provide liquidity by rushing into the market. This can lead to traders making decisions based on emotions rather than sound logic. I know this sounds mysterious in some ways, but after showing you some examples right here, you will exactly know what does this mean. So let's say we have this structure. Price is moving lower and it is drawing to a higher time frame objective. What is a higher time frame objective? It could be equal lows, like obvious lows, maybe equal weekly lows on the daily, on the 4-hour, or a fair value gap. So the market has been lower, has been selling to the downside for a while now, and it is obviously that it has an objective here to reach. Then you see this move right here, like here, a displacement, and then retracement, and then you see this move right here, a displacement, a big displacement breaking this. Now, this is an inducement. This one is an inducement. Why it is an inducement? Because it happened in the middle of nowhere, so it has no target. This one right here, we are on a sell program. The market has didn't reach the objective yet, but it caused through a displacement here. Now, you may tell, but why this has happened? Why this displacement happened? Although the objective is not met yet. I'm going to tell you exactly why. Now, follow along with this. Now, let's zoom in to this, all right? We're going to zoom in on this swing right here. Maybe this is the daily chart or the 4-hour chart. We're going to zoom in into maybe the 15-minute or the 5-minute chart right here. So this swing right here, this singular swing right here is represented by this failed swing right here. And this is the fake displacement, the inducement. So why this moved, why this move happened? I'm going to tell you why. For example, we are bearish, right? We are selling into a higher time frame objective right here. All right. Now, retail traders will see this here. We'll see this as a trend line because we have failed swings right here. So they are bearish. The market makers are also bearish because they want to deliver price to this area right here. All right. So maybe they are here on this area. Focus on the cursor. So the retail traders are bearish and the market makers are also bearish. Now, market makers, which are central banks, tend to enter in big positions, billions of dollars. All right, guys. So they will sell billions of dollars here to reach to this area. Now, think for a moment. In order for them to sell here, they need buyers. All right. So this is how the market works. They need buyers here. Now, do we have buyers here in this area? No, we don't, because retail traders are also bearish right here. They are seeing this trend line right here, so they are also selling. So there is no liquidity. No one will buy the sell orders of the market makers. All right, guys. So if I am a market maker, what do you think I should do? I would drive price here. So this is an inducement, enticing traders to enter the market. So we are making this move right here, fake move. So this move right here will trigger two things. It will trigger the buy stops right here. So if I'm a retail trader, I will sell here. My stop loss will be here. That stop loss is also a buy. So if you want to sell a stock or a currency for $8, if that currency reverse on you to $9 or $10, you want to buy it back, and buy it back minus $2 right here. So there is a buy orders right here, guys. So this move right here will trigger the buy orders. So what the market makers are doing are providing buys for their big sell orders. And the second thing that will this trigger is inducing traders, enticing traders that the market is going up. So traders that has absolutely no logic will think that the market is going up. Because why they are going up? So they're gonna buy here, all right? So they're gonna buy this move. So now we have two types of buys. The buy stops right here, and the people who are buying this move. So that $1 billion order, sell order, will be filled for the market makers, and eventually they will drive price to this lower time frame, higher time frame objective. Now, why? Let's talk about the second type of traders who bought this move. Why do you think they bought this move right here? Now, they are not informed, guys. Now, they don't know that the market is reaching for this higher time frame objective right here. So when you see this move and they see this trend line get broken, they think that the market is becoming bullish, and that's the opposite. All right, guys. Now, this is called an inducement. I hope you understand the logic. You can see that I did not tell you that when you see a trend line above us or equal highs above us, then expect inducement. I didn't say so, but I give you the exact logic why inducement happens in the market. All right. Now let's move on to the characteristic of a real market structure shift and a fake one. Now, real market structure shift tends to happen in the direction of the higher time frame order flow. Meaning, if we are on a buy program or a sell program, then you will see a market structure shift happens. For example, we are here, the market is bullish. Excuse me. Let's say that the market is bullish, and a displacement will happen like this, maybe like this. An inducement happen right here, and then a big displacement. This displacement happened in the direction of the higher time frame order flow. All right, guys. So another maybe a retracement like here, and then inducement, inducing traders, generating liquidity here, preventing traders to anticipate in this overall bullish move, and then creating a displacement right here, and another one right here. And so next thing, it happens after clearing liquidity. So you can see that this is a valid displacement right here. It happened after it cleared liquidity from here, and this one here cleared liquidity right here, because this displacement is displacement right here will likely to hold price, because it is already took liquidity from this low right here. So price doesn't have to come back all the way to here to take liquidity. All right, guys. The smart money already filled their orders to go higher, and of course it has a clear target. So we have maybe we have a higher time frame fair value gap right here, needs to be mitigated, or we have equal highs, or maybe triple top. I don't care. We have it needs to have a clear target. Now let's talk about now the fake market structure shift. So it is against the order flow. That's the first characteristic. So if we are, for example, let's say we are the market is on a sell program, it will give me go like this, and then a displacement. So this is an inducement. It will be against the overall order flow, leaving intact liquidity behind. Now, what do we mean by that? What do we mean by leaving intact liquidity behind? For example, it would be like this. So the market trades lower, retracing, continue lower, and then a displacement happen. You can see that this displacement left liquidity here. You can see that there is liquidity here. This failed swing. So a fake market structure shift will likely to leave liquidity behind. So it didn't clear liquidity, not like this one. This one cleared liquidity and continue higher. it doesn't have a clear target. You can see from here, maybe we have a higher time frame objective. Here, you can see that the sell program didn't deliver price with that higher time frame objective. Yet we have a displacement right here in the middle of nowhere. So maybe this the market, after hitting another higher time frame objective, a premium objective right here, it switched to a sell program. Now this displacement doesn't have a target because we have already cleared this higher time frame objective. So keep this in mind. The fourth characteristic is it used to prevent uninformed traders from participating in the main move and provide liquidity for the market maker. So uninformed traders will miss this move right here, the sell move. Plus, this will create liquidity for the market makers, guys. Now, I hope you understand these two concepts. Now, let's go to the live examples and you will reinforce these two concepts even better. Now, we have this example right here. This is the eurusd EU on the 4-hour chart. You can see that the market was on the sell program here. It was on the sell program, reaching for a higher time frame objective, which is, I believe, it was yes, it was a daily volume imbalance. All right, guys, reaching a higher time frame objective, and then we have what? A market structure shift. So this is a valid market structure shift. Why? Because we first of all reached a higher time frame objective. We cleared liquidity from here. All right, guys, and we have a clear target. So we have all this liquidity behind. So the three characteristics of a real market structure shift are met here. We have this liquidity untouched here. So first of all, we took liquidity. We have a clear target, plus we reach a higher time frame objective. So we have displacement right here. Price is now what? It's continuing higher. Then what do we have here? What this is got? This is what? This is an inducement. So this is a fake market structure shift. All right, guys. What does it do? It prevents traders from participating in this move right here and generating liquidity. So traders here will see this as a trend line. Let me zoom in a bit. So traders will see this as a clear trend line here and here. So I'm sorry, here, this swing right here and this swing. So they think that the market is going bullish and it won't visit this area right here. So the retail traders are bullish and the market makers are also bullish. Now, there is not enough liquidity for the market makers to fill their orders. Now, what do we have here? Inducement. All right, guys, fake market structure shift to generate liquidity from here. Then continuing higher. We have another one here. We have a displacement, a market structure shift, short term. We have here a retracement, a small retracement to this fair value gap. The price tends to go higher right now. The market makers do a fake market structure shift. I know that this doesn't look like a fake market structure shift, but if we go to the 15-minute time frame or the 5-minute, you will see that this is a big displacement to the downside. All right, guys, that will trick uninformed traders from participating in this move, and they will create liquidity for the market makers. So we took liquidity from this low and then continuing higher. Another one right here, a displacement, retracement here, retracement to here. Price start to go higher. Fake market structure shift right here, taking liquidity from here. Another fake market structure shift right here, taking also liquidity, and then a big move to the upside. Now I'm going to show you another example on the US 100. So from this line right here, we're gonna we're going to study the behavior of price. You can see that we have a displacement right here. What do we have here? A retracement. All right. Price starts moving up. Price starts moving up. A fake market structure shift right here to take liquidity from here, and then moving higher on the overall direction. On price was magnifying to take liquidity from here. So this is the higher time frame objective. Another one right here. Price here. Displacement, retracement to fair value gap. Another fake market structure shift right here, and then a big move to the upside. Retracement, fake market structure shift. You can see this is an inducement, and then a big move. Another one right here, a displacement, fake market structure shift. A retracement, a fake market structure shift. This is a fake market structure shift, guys. Inducement, taking liquidity from here, and then continue higher. Retracement, fake market structure shift, continue higher. Retracement, fake market structure shift. You can see that this is fake market structure shift, and you can see also that it left untouched liquidity. So it left liquidity behind this failed swing are liquidity, and then violating this fair value gap and continue higher. So you can see, guys, that these things repeat, and it's only logical. There is no patterns here. There are no patterns here, only logic. So I believe we have reached the end of this video, guys. If you found it helpful, I would really appreciate if you subscribe to my channel. Leave a comment down below if you have any suggestions or questions, or you can DM me on my Twitter account. And good luck and happy trading.